Amazon stock is up 65% this year, taking shares up to $138. At that price, the company has a market cap of $1.42 trillion. The balance sheet has $54 billion of cash and $18 billion of investments, as well as $67 billion of debt, so the enterprise value is also $1.42 trillion. Revenue over the last 12 months is $538 billion, with $13.1 billion of net income, $63 billion of adjusted ebitda, and $3.2 billion of free cash flow. So Amazon stock is valued at 2.6 times revenue, 22 times ebitda, and 101 times earnings. Valuing the stock based on these company-wide metrics isn't that useful, however, for two reasons. First, Amazon continues to reinvest its profits back into the business, and that skews its price-to-earnings ratio. Second, Amazon is made up of several different businesses, and each one has different profit margins and growth rates. Its online stores segment includes product sales such as books, videos, games, music, and software. This segment contributes the most amount of revenue, $222 billion over the last 12 months. But it's also the least profitable, and it grew only 4% in the latest quarter. Its third-party seller service includes product and fulfillment fees and contributes $127 billion of revenue at a growth rate of 18% year over year. We don't know precisely what the profit margins are, but third-party services is clearly a strong business, and Amazon Fulfillment has been taking share from traditional carriers like FedEx and UPS. Amazon Web Services provides on-demand cloud computing and is Amazon's most profitable segment, with operating margins of 24% in the latest quarter. This segment grew 12% to $85 billion of annual revenue. The advertising segment makes money from ads placed within the Amazon ecosystem. Revenue from this segment is 7% of the total at $41 billion, but it's growing fast, with a quarterly growth rate of 22%. Subscriptions, which include services such as Amazon Prime, produced $38 billion of revenue, with growth at 14%, while Amazon physical stores generated $20 billion, with growth of 6%. Total Amazon revenue is rounded off with its other segment, which includes healthcare services, and contributed another $5 billion to trailing 12-month revenue. All told, Amazon's revenue expanded by 11% in the latest quarter, and its operating income more than doubled to $7.7 billion. The most surprising thing is that the improvement in operating income wasn't driven by AWS or third-party services. A large part of the improvement came from Amazon's retail business. Restructuring of retail supply chains helped the company to reduce delivery times as well as improve margins. What this really reveals is the power of Amazon's business model. It's got multiple businesses and plenty of strings to pull to keep the company moving. And while Amazon stock has climbed 65% this year, its valuation compared to revenue is still relatively depressed, and its valuation compared to ebitda is not that far from a 10-year low. Overall, Amazon continues to head in the right direction, and I continue to rate the stock a buy. But these are my personal opinions, not financial advice, and I do hold shares in the stock. For more detailed investing ideas, make sure to visit our website, overlookedalpha.com.